This is your Capital Economics Weekly Briefing. I'm David Wilder, and I'm joined by Senior Economic Adviser Vicky Redwood for this special dive into our latest thinking about how AI is and isn't yet changing the global economy. Hi, Vicky.
Hi, David.
I feel this should be a regular series because we've spent years tracking AI's development and diffusion and how sort of the core narrative doesn't really change in terms of what we're expecting to happen, but we've still got this ever-changing story in many respects. So before we cover off some recent happenings, just lay out for us what happens from here. How does capital economics see this AI story unfolding?
Yes, I mean, well, you're right. We've always said this is going to be something that plays out over the next 10, 20 years and is constantly evolving. So it is something really that we're looking at all the time and will continue to look at. I think now we're well into the stage of the AI infrastructure build out. We know that enormous amounts of money are being ploughed into building new data centers, etc., and that's going to continue for the next couple of years at least. I think now the big question for us as economists is to what extent are we starting to see the benefits of that filter through to the wider economy, in that how many firms across all of the economy are starting to actually use AI and are starting to see it make a difference to their daily work and their productivity, and therefore how will that feed through to GDP?
So that's the big question yet to be answered. All of this money being ploughed into AI, where's the economic upside, or when does that feed through? But before we get there, as you suggested, we're already well into this AI investment boom. What impact is that having on economies?
We are seeing a significant boost now to aggregate demand and GDP in a number of countries. I mean, most obviously the US, given that's where the bulk of the spending is happening. So last year we saw AI-related investment rise by the equivalent of about 1% of GDP on our estimates. And about half of that went on imported goods. So that sort of the benefits flowed overseas, if you like. But about half then benefited the US domestically. So about 0.5% of GDP boost there last year. And the countries that are mainly benefiting elsewhere are the ones that are exporting all the tech that feeds into the AI build out. And probably the top one of those is Taiwan, that's seen a huge boost to its economic growth rate over the last year or two. So that's where we're seeing the effects come through in terms of the boost to aggregate demand at the moment from that AI infrastructure boom.
And that's, just to be clear, I mean, 0.5% GDP growth in the US directly ascribed to AI. Growth last year was about 2%. So it's a big chunk of US economic activity now, isn't it?
Yeah, it definitely is. It's definitely been a big factor keeping economic growth strong in the US, yeah.
And what about the rest of the world? I mean, you mentioned the US, you mentioned Taiwan doing enormously well as a result of shipping the parts that go to building out this technology. What about other economies? Is there any sign there that AI is having an impact?
China's the other obvious one where there's a significant amount of AI spending going on. It's harder to see a big boost to GDP there, certainly not as much as in the US. But we estimate that AI is still probably last year was probably boosting GDP by, say, 0.2 or 0.3%. And then in other economies, say some of the smaller developed markets like the UK or some of the European countries, a bit of a boost, but not really much of one because there's not much data center construction activity going on there. There is some, but nothing like that going on in the US in particular. So yeah, it's really the US and those big tech exporters that are driving this.
Does the fact that economies like the Eurozone, like the UK, we're not seeing those benefits yet, is that still to come? You said the US is out in the lead. Does that imply then that we are going to see the kind of infrastructure build out that we've seen in the US replicated in economies like the Eurozone, Japan, the UK, and so therefore we could expect to see them benefiting economically down the line?
We might see a bit more spending coming through. I mean, the hyperscalers, they are spending money outside of the US, but I think we never really expected those economies to get their big AI-related gains from the construction of data centers, etc. We expected them to get their benefits when they started to actually use the technology. And of course, all the firms throughout any economy can use AI technology, even if that technology is developed and provided from elsewhere in the world. And so I think for countries like the UK and Europe, what's going to matter is going forward how well companies invest in and use AI and can drive longer term productivity gains from it, rather than them getting any sort of short-term boost to aggregate demand from building data centers, etc.
So this is the third phase of your sort of three-stage AI boom roadmap, if you like. You've just put out this report talking about phase one, the R&D phase, seen that in economies like the US out in front, not very noticeable at a sort of macro level. Phase two, we've just been talking about, that's rolling out data centers, rolling out the infrastructure to diffuse this technology. But then this is what you're talking about. Phase three, this is where companies adopt AI, bring AI into their processes so they can really start to benefit from the productivity gains that it's going to bring. So talk a bit about where we are now in terms of phase three.
Yeah, well, that's where it gets quite interesting, because that's where we're seeing sort of more news on an almost daily basis, really, about how quickly this technology is being adopted. And we've known for a while that there's a lot of individual level company research publications showing that companies that have adopted AI have seen big productivity gains. But what we really want to find out now, and are looking at surveys for, is how many companies are managing to use AI and get big productivity gains out of them. And the news is generally encouraging. Things are definitely moving in the right direction. So if we look at surveys of usage of AI, it's increasing. It's also spreading beyond just the tech sector, where initially it was very concentrated, in particular sectors like professional services, business services, the ones that we always expected to be able to utilize AI most immediately. The AI usage there is actually getting quite relatively high now. I suppose the more sort of sobering news is that outside of those sectors, in parts of the economy where AI is a bit harder to reach, where maybe the applications haven't been fully developed yet, usage is still very low. So things like transport or construction, surveys suggest that still 10% or fewer of firms are using AI. But I'm not too worried about that, because we've always said that it's going to be a long, slow process for AI to get it fully adopted and for the economic gains to come through. So I think it will happen, but it is just going to take time.
And I guess then the big question is where we see productivity gains, because all of this ends with this idea that we have this, what you call it, a general purpose technology. It's a transformative technology, so like steam engines, electrification, the internet more recently. And out of that come these massive productivity benefits, right? So when do we start seeing those, or are we starting to see the signs of that already?
Well, we're potentially starting to see the signs of that in the US. It's hard because you can't disentangle the effects of AI from the effects of everything else that's going on. But we did see a decent pickup in productivity growth in the US in the middle of last year, did tail off a bit towards the end of last year. And if you break that down by sector, as we've done, then productivity growth has been strongest in those parts of the economy which are using AI the most. So those sort of professional services, information sectors, etc. So that lends some support to the idea that it's AI driving this. Now, I don't think AI is the only thing going on. We might still be seeing some cyclical effects coming through from the past couple of years, the previous tightness of the labour market, prompting firms just to work existing employees a bit harder. So it's not clear cut, but our hunch is that AI is now playing a bigger part in driving productivity growth. So when it comes to other countries, though, the evidence is a bit more lacking. So productivity growth is still pretty weak in some countries. Productivity is still falling outright in some places. And I'd say there's not much evidence outside the US that AI is boosting productivity growth on an aggregate basis yet.
It's important to note, isn't it? It's quite a contentious point among you economists as to what's been driving US productivity growth. Our argument is that in the sectors you would expect to see it, we are seeing loosening unemployment conditions, but increasing productivity gains. And all things being equal, that would suggest the benefits of AI. But we don't know yet, right? It's hard to observe at the moment.
Yeah, we don't know for sure. And I wouldn't really believe anyone who did claim that they knew for sure what was happening. But as I say, I think there's tentative evidence now that AI is playing at least some role. And that's probably about what we would have expected, given, as I say, these other surveys showing quite a big pickup in the share of firms using AI, surveys suggesting that US firms also make better use of AI than firms in other countries. So they're just sort of more effective users of it. So it is in line with what we'd expect to be starting to happen.
And how does it compare with, in terms of timelines, in terms of where ChatGPT is not even 4 years old yet. So when we think about timelines, you said at the beginning this is something you'd expect to happen over a decade, bit more. Where are we in terms of, if we compare it to the internet, to the dot-com boom starting in the sort of early to mid-90s and the gains that came from that, where are we in terms of AI? Are we on track? Are things rolling out a bit faster, or is it too soon to tell?
I think that adoption is generally happening a bit quicker than it did with the ICT boom. And I think that's in line with the general historic trend for new technologies to be adopted a bit quicker than the previous one. But equally, because there's kind of a difference between a big share of people using ChatGPT and the like, and it actually being implemented effectively in workplaces. And on that front, I'd say we're probably on about the same time frame as with the ICT revolution. I mean, that took probably about 10 years to fully play out. We saw probably about a decade of stronger productivity growth as a result of it. And it did take a while for firms to overcome all the barriers they face in adopting a new technology, be that having sufficient funds, overcoming institutional inertia to changes, finding sufficiently skilled people in the new technology, all that. Those things that have applied to previous technologies apply just as much now. And so in terms of that sort of rollout across the wider economy, I'd say, we're broadly on about the same time frame as we were back then.
You talked about firms finding sufficiently skilled people. I mean, that taps in, doesn't it, to the jobs anxiety around the AI story. That's been a constant of the work that you've been doing, hasn't it? The impact of AI on labour markets is something you're watching closely, and it does feel like that anxiety isn't going away. It's probably intensifying, if anything. Are you seeing the kind of displacement that headlines are warning about? What level of disruption should we be expecting?
I think we're starting to see AI have an adverse impact on some parts of the jobs market. So, for example, more junior software developers have certainly been affected because AI can effectively do their work for them. And we've spoken before about how some of the entry-level jobs in the jobs market have been affected. So, for example, graduate positions. But that's all part and parcel of technological change. You will get some jobs which the technology can basically replace, but then you get new jobs created in other areas. I think overall, we haven't seen any evidence yet that AI is denting overall employment levels. Now, we might still see in the future some sort of temporary rise in unemployment as the economy adjusts to the new technology. And, it will take time for new jobs to be created and for workers to reskill in new areas. So there might be some element of frictional unemployment still to come through. I certainly wouldn't rule it out just because we haven't seen much of it yet. But longer term, we still stick to our view that AI shouldn't have any detrimental effect on employment. One interesting element to this is that because the technology is arguably developing a bit faster and further than people had initially expected, opening up the possibility that maybe AI will be able to replace most human skills, including things like creativity and judgment and things that people previously thought AI would not be able to have and sort of compete with humans on, then that does raise a question of whether eventually actually AI will be able to replace most jobs in the economy. We are not that pessimistic. I think there'll always be some demand for the human touch, and jobs that have that human touch can expand to fill and to replace any jobs that are lost because of AI. So yeah, on the long run, we still are pretty optimistic or sanguine about the impact of AI on jobs. And although there might be some intermediate adjustments, so we don't seem to have hit that yet.
What you're saying there taps right into this note that came out about a month ago. Citrini, for those unfamiliar, it's a paid Substack investment newsletter. And it had this note called "The 2028 Intelligence Crisis Presents this snapshot of the US economy in 2028, obviously." And it shows how AI has devastated knowledge work. There's knock-on impacts on financial markets. It's killed housing markets, you name it. For certain sectors of the market, they were really hit when this note came out. I mean, it's safe to say that it tapped into this zeitgeist, right?
Yeah, definitely. And I think generally any stories relating to the negative impact of AI on jobs get disproportionate coverage. I think what that report sort of neglected is the positive. If AI were that disruptive, if it had that big an impact, it could potentially replace so many tasks that humans do, then that means there's a massive rise in productivity, a massive rise in the economy's supply potential. And where do those benefits go? And I mean, the report talked about this concept of ghost GDP, but these benefits, this money doesn't disappear. It flows to companies in the form of higher profits, and those profits then get distributed out as dividends to the people who hold shares in those companies. The productivity increases feed through into lower prices, so consumers would see much lower prices for the goods and services they buy, which equates to a massive rise in their purchasing power and real incomes. And then that feeds back into stronger demand in the economy. So I think that was sort of the missing link in the report, and why actually it's not the gloom and doom scenario it made out to be.
But the point that they were trying to make is that the benefits or the returns would accrue to shareholders. AI can do tasks that covering entire sectors of the economy. So frankly, even though goods and services become much cheaper thanks to the benefits of AI, consumers can't afford to buy them because they don't have roles anymore in the economy.
I think they would still have roles. They might not have the same roles as before, but let's imagine that. Let's take the example of financial advisor, for example. Maybe a financial advisor can now use AI, and that it can now sell its advice or sell their advice for 10% of what they used to sell it. I think then demand for financial advisors would shoot up. And I think there's lots of areas of the economy where if prices were to fall sharply, then actually demand for those products and services would rise very sharply. And then you would actually need more people working in those sectors. And I think that's how these sort of productivity improvements and price drops then create additional demand and make sure that actually everyone at the end of the day still does have a job. Now, you can take it to the extreme and say, well, really, what if AI literally can do everything and everyone does lose their job? Well, I think in that scenario, if AI is that amazing, we probably don't need much money because it can produce everything and run our lives for us at very minimal cost. But secondly, it's then down to the government to ensure that its redistribution policies make sure that whoever is getting the profits from all this AI activity is paying enough that the money can be redistributed to a universal basic income or whatever it is to make sure that people have sufficient income.
The other flaw with that, I suppose, is that the timeline that it lays out, 24 months, is hyper compressed relative to how these sorts of technologies typically roll out and are diffused through economies and how the productivity benefits are accrued as a result.
Yeah, that's exactly right. If you go back 100, 200 years, technologies took 50 years for their effects to play out across the economy. As I say, over the years, decades, technologies have got rolled out quicker, but even so, we're looking at 10, 15 years for maybe even more for AI to be fully rolled out and diffused through economies. So yeah, a timeline of 2 years seems pretty implausible.
And time for governments to adapt, for firms to adapt.
Yeah, exactly.
Before you go, we are recording this as the conflict in the Middle East rages. It does, even if Donald Trump appears to have stepped back from the brink. Is it too soon to assess what the fighting of the past few weeks and the byproducts of that fighting could mean in terms of the AI narrative?
Well, it is too soon in the sense that I think what will really matter for AI and also for economies more generally is how long the the rise in energy prices lasts. But I think there's a few things we can say. One is, I suppose this will have an impact on where data center construction, et cetera, and AI investment takes place in the future, because the Middle East had been quite a magnet for AI investment recently, partly because of relatively low energy costs. And I wouldn't be surprised if then it becomes less attractive destination for investment going forward. I think also if we think about, there's some worries that the rise in energy prices will massively undermine the AI investment boom more generally, because obviously AI investment and the training and running of models is very energy intensive. I wouldn't panic just yet. I think over the sort of the medium term, higher energy prices will just incentivize AI firms to improve their model efficiency, their energy efficiency, maybe to invest more in their own power generation and storage. And to some extent, they will just be able to pass on the higher costs. They've probably got relatively strong pricing power. And we're yet to see if there's some government support for firms to help compensate them for higher energy prices. But it might, it might take the edge off AI investment. But there's so much further increase in AI investment plan that even if some of that doesn't come off, I think we're still going to see a further big rise in AI investment over the next couple of years.
Vicky Redwood's new report is called How Deeply is AI Taking Hold in the Economy? It's a global state of play in terms of AI's rollout, but it also shows how current conditions speak to our longer-term forecast for this technology's impact. It's part of our growing body of work on this technology that also includes our AI Economic Impact Index, a proprietary measure which ranks the world's economies by their ability to develop, diffuse, and critically to adapt to AI. If you want access to our rolling AI coverage, along with our analysis and data on global economic developments, drop us a line at podcast@capitaleconomics.com and we can get you set up with a trial quickly. But that's it from me. We will be back again soon with the latest from the front lines of global macro and markets. Until then, goodbye.